The accounting equation is the foundation for every balance sheet. It explains how a company finances its assets through debt or owner investment. This simple formula must always balance. Everything the business owns must be paid for by either borrowing money or using the owner's capital. For every transaction, the left side must equal the right side. If this equation does not balance, there is an error in the books. Assets are what the business controls, liabilities are what it owes to others, and equity is the claim left over for the owners. Companies choose between debt and equity to fund their growth. Debt creates a legal repayment duty, while equity represents ownership stakes. This chart shows a common scenario where assets are funded by a mix of debt and equity. Both sides total exactly 100%. Think of the equation as a scale. Any change on one side requires a corresponding change on the other to stay level. Understanding this equation is your first step toward reading financial statements. Thanks for watching, and remember to check back for more finance basics.